Welcome back. Clicks has shrugged off tough economic conditions, reporting a 13% jump in diluted headline earnings per share. This was due to a strong showing from its retail, health and beauty categories, and the group also managed to post robust sales for its private label products. And joining me now as we recap on the 6 months that was is the company's CEO, Bertina Engelbrecht. Thank you so much for your time, Bertina. Now talk to me about the inroads that you made in gaining market share and where that was achieved.
Oh, actually, we've had a phenomenal 6-month period. And so, first of all, kudos to the teams, but really continuing strong growth in health and beauty in all of the categories. So, pharmacy, fantastic, 80 bips up for the 6-month period. And that's because we concentrated on service. In front shop health, likewise up in terms of market share. Once again, we really got the ranges very right. We got the pricing very right. We innovated. We launched new private label product ranges in front shop health. And then, of course, beauty. What can I say about it?
Yeah.
The affordable luxury element.
Yeah.
So all in all, we're very pleased with the results.
It's quite interesting. You talk about getting the pricing right, and I did see that your margins widened. What was the main driver there? Was it demand, and was that also feeding into prices, and also just how measured were you in terms of pricing and price increases?
So, our legacy is, of course, about being a value retailer, and we really try and be true to that heritage positioning of ours. So let me just say a couple of things. The first is because for many years we were not permitted as a corporate to have a pharmacy.
Yeah.
So the only thing that we could really do as a beauty retailer was to ensure that we were price competitive with local grocery retailers. That is not the case in the rest of the world, where actually a health and beauty retailer has a premium to its pricing. So, that's just made us very sharp on pricing from the very beginning. We look at price indexing every single day, and against all major retailers, on a basket of overlapping items, we are the cheapest retailer. Then, of course, it's the renowned 3 for 2 promotional mechanic, very well understood by consumers and a great footfall traffic driver. And then to that, I can add Clubcard. Of course, we returned 387 million rand to Clubcard customers over the last 6 months, and they contributed 82% of our sales. So quite an increase as well in terms of Clubcard loyalty.
And I love it whenever I go, when the week before payday, and they tell me that I have cash back. And I'm like, yes, I get a discount. Let's talk about UPD. I mean, the lowest growth numbers there came from that division. Just paint a picture for us on those headwinds, but also the layers that you are peeling off to kind of get to a stronger performance for UPD.
So UPD really has got 3 broad segments. In the fine wholesale channel, that's where we've actually seen the decline. And in part, that was, of course, the systems implementation that we did, and you could still see that that had an impact. Here's the positive, though. If you look at the total period performance versus what happened in the second quarter is such a great performance from the UPD team, marked performance, relative to the first half. So let me give you an example. Clicks grew for the full period in that particular wholesale channel, 4.7%. Actually, in the second quarter, it was 13%. Hospitals you'd have seen for the full period down 8.1%. In the second quarter, up 0.4%. So great. I think something great to look forward to in terms of fine wholesale for the remainder of this year. And then, of course, in the export category, we've seen a 30% improvement in sales in the second quarter. So a lot of things that are really going right. Overall, in bulk distribution, we've actually grown 13% in UPD. So I think you've just got to see that wholesale, of course, is quite a large portion. It's got a more differential positive margin than the rest of the business. But I'm very, very, very confident that the post-systems recovery plan that we have put in place is yielding positive results.
And I mean, it really says something for a company to still be expanding its store presence in an environment like this. Let's talk about that and your expansionary story. How aggressive or measured will that be in the short to medium term?
at any point, we probably know with a fair amount of accuracy where we're going to be opening up stores for at least a 2-year period.
Yeah.
That's how far our planning horizon stretches. And so that's why I feel very, very confident when we give them the guidance to say that we will increase ahead of our guided range of 40 to 50 stores. We'll actually get to 50 to 55 new stores in this financial year. So fairly confident. We know where they're going to be. We understand the dynamics of the markets and the locations where we're going to. And so I think everything to look forward to in terms of the last 6 months of this year.
Yeah, of course. I mean, right at the beginning, you spoke about a continuing growth story. Are you cautious of anything that could slow down that earnings growth momentum in the short to medium term, or are all those risks baked into the system?
In coming up with our our guidance in terms of diluted HEPS for this year, the 10 to 15% range, we took into account all of the factors that I've outlined, such as, for example, the constrained economic environment, the likely threat posed by disruptions due to the general elections, which is very contested this year, as well as, maybe higher levels of load shedding as we enter into the winter period. So we've taken all of those into account and we feel fairly confident that we will hit the number.
Well, thank you so much for your time and giving us more detail on those numbers that came out of Clicks, Bertina. That was the CEO of Clicks, Bertina Engelbrecht.